Hey, what's going on, guys? All right, wanted to bring you a part two to zones. Dig in a little bit more and expand on what I went over in the last video. Okay, so first things first, before we do anything, I want you to go and get yourself a notebook and a pen so you can write down these points in your own handwriting and make yourself a nice little study guide for later. Okay, that you can review and hopefully will be really helpful for you moving forward in your trading. So maybe pause this video, go do that, and come back with your notebook and pen, and I'm going to get started and dive right in. Okay, what is the point of drawing these zones? Okay, what's the point of doing that? Well, the point is that it helps you establish a baseline for your trading plan. And that baseline is you're trying to extract three values before you enter any trade. Any trade, you need to establish these three values, okay? Your entry price, your stop loss price, and your target price, okay? Entry price, stop loss price, target price. You're trying to determine what these prices are, okay? What these prices are, where you want to enter, where you want to exit, or where you want to, enter and maybe not exit, but maybe flip and go the other direction, right? So that's what you're trying to determine, and that's why you need to draw the zones, okay? All right, now, how are zones created, okay? There's two ways a zone can be created, okay? It can occur with a strong impulsive move like this. This is a BFI footprint right here. It can occur like this with a very strong impulsive moves leaving the zone, okay? And that makes your job easy when that occurs, right? We love that. It makes life easy. Or it can occur slowly like this over a longer extended period of time, right? But so you're trying to look for these BFI footprints, right? And then how strong these footprints are, right? Like, this is another BFI footprint. This is another BFI footprint, right? This is a huge one, okay? So you're trying to establish, you're trying to get an idea, I guess, if you will, is a better way to look at it, of how strong the orders are, who's in control, and where. And where are they in control at? Where do they want to unload their position? Okay, so you don't want to ever fight the BFI. You want to work with them, because if you fight them, I promise you, it's a losing battle. So I want you to think of these zones as the origin of where this price originated, right? What triggered the process of buying or selling, right? What triggered that? Okay. So, and then you want to be trading in your zone and take the trade, never letting the price leave the zone without you being involved. Okay. Now, when you think of these zones, I want you to think of these zones as, just imagine this. I put these values here for you to give you a visual. Okay. Think of these zones as orders sitting here waiting to be bought or sold. Okay. But each time price returns to the zone, those orders get weaker over time, okay? And the strength of those orders are weakened, all right? So you can see here, let's say we started at 50,000 shares, right? And they unloaded. And we have 15,000 buy orders sitting down here. And they bought, right? But it was a weaker buy, right? So they unloaded 20K and they bought 5, right? So that gave us our values here. So they unloaded another 10,000 and they bought 5. And then, from here, let's say they unloaded another 10,000 and there was only 5 left down here, okay? What's happening here now at this point on Friday, for example? This zone is experiencing what is the next step of the zone process. Is called zone wipeout, right? What happens is, just think of this as all these orders that are just coming down, they're just steamrolling, headed towards this buy zone down here, which is where the strongest orders are and the highest probability for a reversal. And you can see how that occurred right there. Okay, So you can see there was really no buy orders here, but as we started getting close to this zone, you can see them starting to trickle in before they finally hit the bottom of the zone, and it has a small impulsive move, all right? But you can see how that is weaker now, where it's unable really to leave this zone. It leaves momentarily and falls right back into it. You know, it's trying to leave and gets hammered and actually breaks the zone, right? Now it broke the zone, and so it triggered an impulsive move to try to come back into it and try to leave it, but it couldn't, and it drew this nice hard line here again, just like it was in after hours, pre-market, and intraday multiple times. And you're getting, you know, if you follow me on Twitter, you'll see what I'm saying. You get 1 touch, okay, 2 touch, 3 touch, 4 touch, okay, leaving that zone, all right, and it's unable to leave it, and that's telling me that this zone is getting wiped out. So zone wipeout, right? How strong are these orders? Well, let's look at it. You have 2 candles leaving the zone and 4 to get back to the same price. Comes up to its resistance level, you have 2 candles leaving it, and you have 5 to get back to this same price, followed with 2.5 hours of selling. All right. So the strength, the size of the candle, and the speed and the volume associated with it. You can see this is elevated volume over the buying, right? Like look at the buying volume here, here, and look how strong this selling volume is. Okay. So strength, size, speed, volume of these candles entering or exiting a zone tells you, you know, a lot about what's happening. Okay, so I always like to compare the price, you know, the time frame that it takes to return or leave is very telling. And like at this point, I think this zone is getting wiped. Now, what is official zone wipeout? Well, I put these zones back on the chart here so you could see it, what that looked like. So that was the last 2 weeks I was just showing you. This is the week before. So you had these zones here where price was ranging back and forth, and then eventually price left this sell zone for the last time, fell through the buy zone, zipped through it for the first time again, fell through it, and then a macro candle printed underneath that zone and closed. It printed and closed underneath that zone, and then you see what happened. Pretty much just a straight line down to the next buy zone. Now, what's happening here is you're getting this indecision candle, but it's getting followed with a macro candle just barely closing, 2 of them closing beyond this zone. Once you have a macro candle that looks something like this, or this, or this, or this, close beyond this zone, we will delete all this from here, because these zones, that means that these orders here have all been filled, and all these orders also have been filled. Okay, and once they're filled, that's it, and you will see that buzzsaw effect like this where price just runs, you know, because there's no orders left to stop it. Okay, so that's what happens when zones gets wiped, and it can get wiped in either direction, by the way. It can get wiped to the plus side or the downside, or you know, the upside or the downside, right? So like for me right now, like this buy zone looks crazy weak, and this 314 level would be, you know, a point of interest. You can even see I have an alarm there. If it were to break beyond this, then that would make, you know, that would give me the interest to potentially take a long position. But it has to not just break, it has to break and hold, right? So you'll often see me say in tweets that I want to see 2 consecutive 15-minute candles close beyond the zone to validate it, right? So like this, like when I see this candle like this leaving this buy zone, I'll take this, right? I'll take this trade, even though it's a low probability trade. I'll still take it because it's still been a valid zone, right? But I'll trail that stop. I'll trail that stop, because if I don't get 2 consecutive 15-minute candles, especially having this one weak, how weak this one was, leaving it and wicking down back into it, I'm definitely going to trail a stop as it leaves the zone, right? So I'll trail a stop here, and it'll, I would have got stopped out here, and then same, I would have bought back in once price started to reverse, and I'd trail a stop here, because if I don't get 2 consecutive candles like that, ideally 2 strong ones that look like this, leaving that zone, it's invalidating it, and it's invalidating it with this bearish engulfing, and that's exactly why you want to trail your stop, right? It's exactly why you have to. Same thing for me, like when I opened this long position the day before, right? But then it invalidated the zone by pulling back down into it. As soon as the market opened, and I see this big bearish engulfing candle and bleeding all the whole time from pre-market to after hours, it's invalidating the zone. So it's telling you that price wants to move lower just based on the way it's trading. I mean, look at it. Look how strong it is. You got 1, 2, 3, 4, 5, 6, 6 candles to pull up from this price and 1 to come down, right? So like that was your biggest signal right there before the market even opened, that this price wants to reach lower beyond this zone, and it's exactly what it did. So the strength, size, the speed of these candles and the volume associated with it is very, very telling. So use those trail stops accordingly. I can't emphasize how important that is. So let's see, next point I want to touch on is, what is a hard break? A hard break, that's just the terminology that I use. A hard break outside of a zone, okay, looks like this. Just go like this. This is a hard break out of a zone, right? This is like a really hard, very strong, right? Same thing here. This is a hard break leaving a zone, okay? This one is not as strong in the pre-market, but it immediately just has that hard break leaving that zone, right? And then on a more macro view, like this, right? Here on the previous weeks, this is a hard break leaving that zone, right? And that's telling you that the BFI is still holding. They're continuing to hold short positions, and they're going to continue to leave. It's going to most likely be a continuation from that zone, because this macro candle is closing beyond it. Okay. Last, or second to last, reaching versus rejecting. Okay, reaching versus rejecting. All right. This is where a lot of people struggle. Okay, a lot of people struggle with the reaching versus the rejecting. The reaching versus rejecting is all dependent on where you are on the chart. Okay, so like for this, right, is this candle right here, is that reaching or is it rejecting? Well, you didn't know at the start, right? Because this is the first time validating this zone. Maybe we'll go here. We'll go the second time. Second time. Is this candle reaching? Are these 3 candles reaching, or are they rejecting? Well, they're rejecting because it's right at the top of the zone, and they're rejecting back down into the zone, and they're being followed with this bearish engulfing candle, showing you that that's a rejection, right? Which is why I like to operate on this 15-minute time frame, okay? Because it's a lot more clear when you see it that way. This is a very clear rejection. Look how weak these candles are here going at the top. You can see how weak they're getting, where this buying is being met with sell orders, and you're getting that indecision here in the market. You're getting 1, 2, 3 bearish engulfing, another indecision, and then there's your, there's always an appetizer before the main course. That's another point to put on your study guide. There's always an appetizer before the main course. Always, always, always. Especially to the downside. Especially to the downside. So reaching versus rejecting all has to do with where the candle prints on the chart. Is it in a sell zone? Now, if you were to get this right here, or this printing above this sell zone, then that would be reaching. But it's not, because of what's following it. You're getting this indecision, even though these wicks are pointing up. you're getting this indecision followed with a bearish engulfing, letting you know that's rejecting. Okay, so same thing here on the opposing side, right? You can see it here again, same thing, right? Is this reaching or rejecting? Well, it's rejecting because it just gets barely above the zone, is immediately met with sell orders, and that followed through, and that followed through into the next day into the pre-market, and you can see it melting away out of the zone, right? So, all right, on this side of it, on the buy side, right? Is this reaching? Potentially, right? And that was my take on it. I said, well, this is reaching. You know, it's trying to leave that zone again, potentially validating my zone from, you know, I'm expecting this kind of movement here again, right? This kind of movement to pull me out of the zone, you know, because this was a really strong movement here. You know, this is in 1 hour, it moved from 310 all the way to 318. You know, that's pretty strong. And so, you know, the first time price returns to a zone, that's when it's strongest. Not the second, not the third, not the fourth, right? So like here, right? This was the first time price was in that zone, and it did this. It did this. Baba, please be quiet. Shh, quiet boy. Quiet. I know they're banging. I know. You know, this is the first time price was in that zone. The second time it touches, that's the best deal, right? So, Baba, stop. I know. Quiet, quiet. So, you know, the first time price comes back into that zone, that's when it's always the best deal. And that's on either side, right? Whenever price touches the first time, not the second, not the third, because these orders get weaker over time, right? So this was the first time price came back down into this zone after printing this big move. So I make the assumption that, okay, there's still buy orders there. I don't know how large they are or what's left, but I make the assumption that in this zone, there's going to be significant buy orders sitting there, right? And you can see it came right to the penny, and it, you know, immediately bounced out, what, like how many? $4, you know, in 45 minutes, you know, and it had a nice bounce. But following the next day, that's what's invalidating my zone, because now instead of reaching out of it, it's rejecting. It's rejecting, so potentially invalidating the zone and potentially wiping the zone. And we'll see how that looks on Monday when we follow through. If this zone is going to get wiped and deleted from my chart, and I would be deleting all of this and getting ready to draw new zones, expecting that continuation to occur until I see another impulsive move creating a new zone. So let's see, that is it. That is it. Those are the points that I wanted to cover in this video. I covered everything. So you know, I covered creation versus wiped, quick versus slow, entry price, stop loss price, target price, origin, what triggered the impulsive move, what BFI footprints look like, the strength, the size, the speed, and the volume of the impulsive move determines, you know, tells you a lot about how strong the orders are that are sitting there. You know, what's a hard break, what's reaching for versus rejecting, and wicking into, you know, wicking into a zone doesn't also, actually I didn't cover that last one. Wicking into a zone. All right, this right here, like let's say we were looking at this on like an hour time frame, right? You know, wicking, coming up into a zone, pulling back into it, right? And rejecting away from it, and then wicking back into it. This doesn't mean that it's wiped just yet, right? It's not completely validated just because there's, you know, there's wicks pulling back into it. It doesn't mean that it's fully wiped yet. It has to print that macro candle, that 4-hour candle. Okay, it's got to print that 4-hour candle beneath this zone and close there, right? It has to stay there. Now, that's why you always use the 4-hour and 15-minute. That didn't quite occur because it was wicking back into it at the close. You know, this is just that 4-hour time frame is showing all of this, so it's not showing you what's happening on the smaller time frame, which is why you need to use both time frames so you can validate what's occurring. So I don't consider this zone officially wiped yet, but it looks like it's about to be. So that's just what I see. So, you know, wait. I want to wait until I did take a small short position at the close because I do think it's going to get wiped based on what I saw intraday. Okay, based on what I saw after hours in pre-market. Okay, I don't like to predict. I like to stay reactive, but I'm reacting to what I see and I'm making that prediction based on that. But that's why I also only took a small position because it's not fully wiped, but I believe it's going to be. So, and then at that point, I will erase these zones as they've been completely wiped and the orders, in my opinion, will be filled at that point. So, and that was the last point I wanted to make on this video. If you have any questions, tweet me, comment, DM me, let me know. But this was part 2 to zones. Hopefully this was helpful. Hopefully you know got some value out of this, and that study guide will help you moving forward. So I'll see you guys on the next one. See ya.